All right, VWAP. So for this, it kind of goes into hand in hand with the volume and market profile. VWAP, if you don't know, stands for volume weighted average price. A lot of people think it's just like a different type of moving average. And in one aspect it is, but when you truly understand exactly what VWAP it is, it becomes very, very powerful. It's essentially a value in motion tool. So we can use VWAP in conjunction with the market profile and the volume profile to gauge how whether what I call is developing value, right? The VWAP is essentially developing value because it is being created constantly throughout each day, and we can tell through that indicator whether price is staying within value or if it's wanting to trend. So this is how I use and what I use to identify trend versus consolidation. All right, so VWAP is the volume weighted average price. VWAP is a visual representation of how value develops through the day, and its ending value for the day closely represents the day's established volume profile. It is a very good tool I like to use to help me determine if the day is going to be a rotational day, let's say consolidation, or a trend day for my intraday trades, but you can use VWAP for all time frames. When VWAP is flat, it is generally because of balanced oscillations higher and lower through the value area, a rotational or consolidation type day, as volume is sold when it gets above it and it's bought when it gets below it, right? Creating that churn. So when VWAP is moving higher or lower throughout the day, it is because trade volume is happening at higher and higher prices, or vice versa. Typical indication of a trend day. And when I say trade volume is happening, it would be specifically trade buy volume or trade sell volume, that the pressure is pushing it in one direction versus back and forth. So VWAP example. So here you can see how the VWAP follows as volume trades at higher prices. The higher the volume is will affect VWAP value along with time, as the value is weighted against all previous volume price points. The anchor point is generally where the asset begins trading at each section and is reset the following day, week, or whatever you choose. There's a lot of flexibility there, right? So just for an example, price opens here. So what you have here is, and I think I'm going to go over this in probably the next slide, but we have, these are, they're deviation lines, right? So it's essentially, they're extensions of the current VWAP, right? That you have above and below. And so the way I look at it, and we haven't gone over this yet as well, we're going to do, again, a deep dive into value area high and value area low and how that relates to value and trending markets for the market and volume profile in the strategy course. But essentially, what happens in between those two big thick lines there is the value area, right? So we can still have a lightly trending market, right? Where, think about it, price comes back down into value and then boom, is rejected higher. And this also plays into our structure, market structure, right? Higher highs, higher lows, higher highs, higher lows, right? So this is, again, another way to identify and see, hey, this market wants to trend, so we should be long. We should have, if we were originally thinking we should be short, no more, right? These are signs that this market is being rejected, right? We use that term again, rejected from the downside higher. So every time it comes back to the VWAP for the day, because it's being created as it's happening, right? As the day's going on and volume's coming in, market is rejected higher. So value, so a good area to buy for this one would be at or around VWAP. And then good areas to sell would be as it comes outside of the deviation bands and it becomes overvalued at that point, right? And then the trend really kicks up, and then market just continues, just completely trends outside of the VWAP. And this is what I call, this is price discovery mode, right? We are no longer hanging out in value. We are searching for new prices higher. And this is just, it's a difference between, kind of churny, rotational type trending versus a full-on trend, right? And so once things get too far out of whack, right, we can see that we had a trend line here. There's our 45-degree trend line. And then the trend got steep, right? We had trend line acceleration that happened through here. As the market got excited, people got greedy, and they're pouring into the trade. Well, we know that that's not sustainable, right? So what happens? Market reverses, comes back down, just as it overshoots value, comes back down, overshoots value to the downside, but ultimately is rejected back higher because the market's trending higher, right? So it's a pretty good example of that. All right, VWAP continued. The center line is the actual VWAP itself, and the additional lines extending out from the VWAP are various standard deviations, as I just mentioned. So therefore, the VWAP becomes a measure of volatility as well as the range and volume of the day are expanded, right? We can see that here. Tight here, volume comes in, boom, big volume, expansion, right? This gives us visual markers as to how price is moving within and outside the day's developing value. Much more on this to come. Again, just like market profile and volume profile, we're gonna do a much bigger dive into VWAP as well. But right now, it is introducing the tool, what it does, why it's important, and letting you know why we use it.